Markets in May actually performed relatively well. We might have expected to see some volatility given all the political noises that we've seen globally. But aside from a brief period in the middle of the month when the noise coming out of the US was particularly high, what we've seen is that markets have focused rather more on relatively good corporate earnings and rather less on some of the political noises that we've seen around the world. This matters because starting equity valuations are actually relatively high versus history, and so we need to see good earnings delivery from companies globally in order to sustain asset prices. So inflation actually has been quite interesting over the last couple of months. If we think back to the start of the year, we saw a spike of inflation in the UK, partly related to weaker sterling, globally partly because oil prices had risen versus a year ago, and we began to see that feed into inflation. If we look forward now, what we've seen is that actually inflation has begun to taper off a little bit, partly because oil prices have been relatively stable over the last few months, but also possibly because we haven't seen some of the wage inflation that we might have expected to see, given that unemployment is actually relatively low in a number of developed markets. So when we think about our starting assumptions about relatively robust economic growth feeding into corporate earnings, we need to keep an eye on inflation, because we need to take it as a gauge as to how strong these economies really are and to what extent central banks are able and willing to begin to normalize monetary policy. As we sit here today, the suggestion seems to be that we may be seeing rather less interest rate hikes over the course of the next year than maybe we might have expected at the start of the year. When we think about markets in the coming months, we continue to think that there'll be a tug of war between the economics and politics. On the one hand, the economics still look relatively robust, corporate earnings have performed relatively well, economic growth looks decent. On the other hand, there's still scope for political noise to disrupt things, particularly if some of the politics begins to filter in either into economic expectations or into economic policy.